Welcome everyone to your 11 Tax Hacks for Instructors webinar. I'm so excited to see so many people coming online and registered for the webinar, and I'm really looking forward to sharing all my tax hacks tips with you. So I'll just wait a couple of moments for people to join the webinar. You will notice that there is a chat box at the bottom of the screen. So if you would like to ask questions, you can enter your messages in that chat box, and it may actually ask you to register as a guest before doing so. Okay, before we get started, I'm just going to run through a disclaimer with you. So just to let you know that what we run through on the webinar today is general in nature. So you should not rely on the contents of the webinar before or without first obtaining specific advice for your particular situation. Okay, in this webinar, you will learn what you can claim as a tax deduction, superannuation as a contractor. We'll run through contractor versus employee as a contractual arrangement. We'll run through business versus employee in your tax return. Then we'll look at the small business tax concessions, why you should be using an accounting package, why you should register for GST, and also how you pay tax now that you have an ABN. And then we'll run through how Heal Thy Money Co can help you, the bonuses for attending live, and then there will be time for some questions and answers, some Q&A at the end. So we'll ask you guys to save your questions for the end. And just with those questions, again, they do need to be general in nature. So won't be able to answer any specific tax advice online. But if your question, you think it will kind of be suitable or help everyone, feel free to ask away. So firstly, to introduce myself, my name's Angela. I'm the founder of Heal Thy Money Co. I'm a chartered accountant and have been for 20 years now. I'm also a Pilates instructor and coach. And it's my vision to create a ripple effect of love and light by helping you simplify and take control of your money, enabling you to shine brightly and be of your highest service. So give yourselves a pat on the back for signing up and coming along this morning and taking a step towards getting your finances under control. So tax hack number 1, what can I claim? So some typical deductions for instructors are your professional indemnity insurance. You can claim for membership fees such as the APMA or PAA fees. You can claim for any courses and workshops that you undertake to further your education. You can also claim for the travel and accommodation in relation to those courses and workshops. You can also claim for any classes that you attend for inspiration. These are kind of like an education and furthering your knowledge. If you have a Spotify subscription, you can claim for that if you use it for music for your classes. You can claim for room hire fees if you're hiring a space for any of your classes. If you have a website, you can claim for any costs associated with running that website. You can claim for social media marketing costs such as Facebook ads or Instagram ads. And if you purchase any industry-related books or texts, you can claim for those as well. You can claim for clothing and shoes if you're considered a business, not an employee, and we will run through the differentiation of this a bit later on. So you can claim for business meetings and light lunches if you're going out for coffee that are work related. You can also claim a business percentage of your internet and mobile bills. And also, there is a deduction available if you buy a handbag or a bag and you're carrying around laptops and other work-related items. So that's quite a cool deduction that not many people know about. So they're kind of some of the basic tax deductions that instructors can typically claim. Now, in the next couple of tax hacks, we'll run through some more meatier deductions that can give you a larger claim. So tax hack number 2, the home office deduction. So if you do any work from home, this can be quite a lucrative tax deduction for you. So the first question you want to ask is, do you work from home? So if you're doing Instagram posts, other social media posts, working on a website, or doing class planning, this all counts as doing work from home. So the next question to ask is, do you have a dedicated office space set up? So you can't just be using your laptop on the dining table or the couch, but if you have a separate office or even a desk within your living space, then you will be able to claim this home office deduction. So if you're renting, you can claim a portion of your rent based on the area that your office space takes up. If you're paying for a mortgage, you can also claim a portion of your mortgage costs, but it will open you up to a capital gains tax, so it's generally not worth it. So whether you own or you rent, you can claim a percentage of your lighting and heat bills if you're working from home, and that's worked out as a rate of 44 cents per hour for the number of hours that you do work from home. It's a good idea to keep a log for about a month to figure out how many hours you actually work from home. The people do tend to underestimate this. And then if you are working from home, your business percentage of your internet bill can be quite a large percentage. So the home office deduction tends to give you a couple of $1,000 taken off your income, reducing your tax at the end of the year. Tax hack number 3, the car deduction for your business kilometres. Now, there are 2 different methods for claiming for your car. The first method is the logbook method. And with this one, you do need to keep a logbook for 12 weeks, taking note of all your kilometres and which ones are business, which ones are personal. The second method is the cents per kilometre method, and there's no documentation required for this one. So if you get to the end of the year and you don't have a logbook, everyone can use this cents per kilometre method. With this one, you estimate the number of business kilometres that you drive, and you can use Google Maps, work out the number of weeks you do that particular trip, and then calculate the business kilometres that way. There is a maximum of 5,000 kilometres that you can claim for. The rate for the deduction is 66 cents per kilometre, so it does give you a deduction up to $3,300. Now, business kilometres are considered those between your studios, so not between home and a studio, unless your home is actually considered a workplace, such as a home office, which is what we went through in the previous tax hack. So if you do use your home as an office, then the kilometres between your home and the studio are claimable. Now, if you're driving a lot, so your kilometres are more than the 5,000, it will be worth your while to keep a logbook and use the logbook method, as that method does give you a higher tax deduction. So with that one, you get to claim a business percentage of all your car-related costs, and that includes your registration, maintenance, petrol, tolls, and everything. So yeah, if you're driving a lot of kilometres, it's a good idea to look at keeping the logbook. Okay, tax hack number 4, paying superannuation. So superannuation is really important. So you should be paying super at the amount that you would be paying if you were in a corporate job, which is currently 9.5%. So I know this can be quite a large chunk out of your wage. So if you can't quite afford the 9.5%, it's a good idea to put in just as much as you can afford. So superannuation, basically, the earlier you put money into your super fund, the better, as you have the power of time and compounding. So it is something you don't want to stick your head in the sand about, because time will get away from you and you'll be at retirement before you know it. So there is something called the Low Income Super Contribution, or LISC. Basically, if you're earning $37,000 or less, the government will match any superannuation contributions that you make up to $500, which is pretty cool. It's a free $500 into your super fund. So if you are not contributing a whole lot, this represents quite a large sum of money. So a super payment of $3,325 will earn you the maximum payment of $500 from the government. If you contribute less than that $3,000, the $500 will be prorated. If you contribute more than the $3,000, the payment from the government is capped at the $500. So I did have a couple of questions around super from people. So someone was asking, does super reduce your tax? And the answer to that one is yes, definitely. If you do make a super contribution, it is a tax deduction in your tax return. So it reduces your taxable income and then thus the amount of tax that you have to pay. And another question I had around super was around paying it. What's the best way to keep on top of it and how do you actually pay it? So that does depend on your individual super fund. If you go online to the super fund's website, they usually will have details on how you can make a payment, and it will give you, you can even use like a BPay and it will give you a reference that links straight to your super fund account. Tax hack number 5, superannuation for contractors. So essentially, superannuation is governed under a separate legislation called the Superannuation Guarantee Act. And the definition of an employee under this act is a bit more far-reaching than the normal Income Tax Act. So contractors can be considered employees for super purposes and should be paid super if you're earning over $400 a month at any one studio. So this will depend on your individual situation and the essence of your contract. The ATO guidance on the area is that you're considered an employee for super purposes if you provide your labour and skills and you are not able to subcontract to another person. So this essentially means that if you're the person that is contracted to teach the classes and you're not able to delegate or subcontract that responsibility to anyone else, then you're more than likely to be considered an employee for super purposes and should be getting paid super. The PAA industry position is that contractors should be being paid super. Now, there are fairly significant penalties and interests for employers that don't pay super, that don't get this right. So it is in the best interest for a studio to really look into this and start paying their contractors super if they are entitled to it. The ATO is currently offering an amnesty to employers that if they volunteer and kind of look at this super and put their hand up, then they will waive any penalties. So contractors are able to make a claim for their super through the ATO and Fair Work. And if it does happen that way, the employer can be subject to quite hefty penalties and interest. So it is in their best interest to get it right. And the ATO doesn't kind of see ignorance as an excuse. So a potential idea for people is to negotiate a pay rise and ask for it to be paid as super. So I know this can be quite a tricky situation or tricky question to raise with their employers. Now I've just popped a link at the bottom of the slide there to the ATO website. They do actually offer a tool which asks you questions about your individual contract. And depending on your answers to those questions, they'll let you know whether you're considered an employee for super purposes or not, so whether you're entitled to super. You can actually save that document. You can add your name and the studio's name into it, and you can print that out and then take it to your employer to help with your negotiations. Now, it is a good idea to get some advice. So as an accountant, I can help you with that advice if kind of the wording on the ATO website just doesn't make any sense to you. And I also work with a legal service. You can get legal advice on your particular situation as well. Okay, tax hack number 6, contractor versus employee within your employment contract. So it is the details within the working arrangement or your contract that determines if you are a contractor or employee. So this comes under the income tax legislation. Now, an employee is basically someone that works in the studio and is part of the studio, whereas a contractor is running their own business. So it's not necessarily black or white. There is a lot of grey areas, and it does come down to looking at how your contract plays out in reality. So some of the factors that the ATO will consider around this, number 1 is your ability to subcontract or delegate. So this is similar to the superannuation for contractors. So whether you're the one that's contracted to teach the class or whether you're able to just delegate that responsibility to anyone. The second one is the basis of payment. So if you're getting a rate per hour or rate per class versus quoting for a job, or you're getting a different rate depending on how many clients are in your class. The next one is who provides the tools and equipment. So if it's a studio that's providing the reformers and the trapeze table, etc., then it's more likely to be an employee relationship. The next one is looking at who takes on the commercial risk and who is legally responsible for the work. So do you get paid if your clients don't show up? do you have to provide for your own professional indemnity insurance? So if a client sues, it goes through your insurance. The other one to look at is who has control over the work. So does the studio direct the way that you teach, or do you have freedom in the way the class is run? And then the last one is independence. So are you considered part of the studio, or do you operate your own business independently? So essentially, do the clients come to see you as your particular business name, or are they coming to see you as part of the studio? So my business name is Angela Marie Pilates. So do my clients come in to see me within the studio space as Angela Marie Pilates, or are they coming in to see me as part of the studio that I teach at? So the first three, the ability to subcontract, the basis of payment, and who provides the tools and equipment, do tend to have more weight by the ATO. So if your answer to those is indicating that you are an employee, you're more likely to be considered an employee. So it is actually against the law for a business to incorrectly treat their employees as contractors. So again, it is in the best interest for the studio to get this right. There are extremely substantial penalties and charges for getting it wrong. Now, there are some common myths and misconceptions out there in the marketplace, and I did want to run through those now. So the first one, if a worker has an ABN, then they're considered a contractor. So this is not necessarily true. It comes down to looking at the essence of the contract. So whether they have an ABN or not, they could be considered an employee. So everyone in the industry takes on workers as contractors, so it's okay. Again, just because everyone else is doing it doesn't necessarily mean it's the right thing to be doing. A worker cannot work more than 80% of their time for one business if they want to be considered a contractor. So this doesn't have any weight in this particular argument, contractor versus employee. This 80% rule is to do with something completely different. I've always used contractors, so I don't need to check whether new workers are contractors or employees. So studio really should be looking quite deeply into each individual contract of each individual person that they're taking on. So if a worker has a registered business name, then they're a contractor. Similar to the ABN, this is not necessarily the case. It comes down to the essence of the contract. If a worker is a contractor for one job, they will be a contractor for all jobs. Again, you need to look at the essence of every contract that gets taken out. Should only take on contractors, so you don't have to pay super. Unfortunately, not paying your employees their entitlements is illegal. So just because they're a contractor, they could still be entitled to super based on the rules we spoke about earlier. Workers used for specialist skills or qualifications should be engaged as contractors. So this isn't necessarily true, as employees can also have specialist skills and qualifications. The worker wants to be a contractor, so therefore they should be treated as one. Again, it comes down to the essence of the contract. So regardless of whether the worker prefers to be a contractor or not, doesn't play any or have any weight. If a worker submits an invoice for the work, they're considered a contractor. Again, just because someone's submitting an invoice doesn't mean they are a contractor. It comes down to the essence of the contract. And if a worker's contract has a section that says they are a contractor, then legally they are a contractor. So with this, just because something is written into a contract doesn't necessarily mean it is true. So the ATO will always look at how that contract plays out in reality. So I've popped another link at the bottom of the slide there to the ATO website. So this takes you to a tool that asks you questions about your contract. And depending on how you answer those questions, it will tell you if you're considered to be a contractor or an employee. And you can save this, add your name and the studio's name and print it out and use that as a document to help with any negotiations. So again, if this is all too confusing, I can offer you advice on your individual situation, and we can also get some legal advice to help you kind of arm yourself for any negotiations that you do go into. So it's a really good idea to educate yourself first and then lead yourself into some discussions with your employer, knowing what you're talking about essentially. Tax hack number 7, business versus employee in your tax return specifically. So if you are a contractor and you're invoicing only one studio, then the ATO actually considers you to be like an employee for tax purposes, even though you have an ABN. So this does limit you to what tax deductions you can claim as if you are an employee. Now, to be considered a business for tax purposes in your tax return, you need to be invoicing several studios. Having a website certainly helps, and if you're utilising that website and social media to advertise and obtain jobs and clients, then the ATO looks at you as operating more of a business. Now, the main difference between being considered a business or an employee is the clothing deduction. So as an employee, you can only claim clothing if it's a uniform. But if you're a business, it's a bit more flexible in terms of what you can claim there. And then as a business, there are also some small business tax concessions available, which reduce the amount of tax that you have to pay. And we'll look at these in the next slide. Tax hack number 8, small business concessions. So you're considered a small business if your turnover is less than 10 million. So if you're small, there is a tax offset available, which effectively reduces the amount of tax that you have to pay. Now, there's also an immediate tax write-off for large purchases, such as reformers and trapeze tables. So this enables you to claim the whole amount of the purchase of that equipment up front, up to a limit of $20,000. And if the Liberals get in at the election, it's in the budget for this to go up to $30,000. So that's quite a big advantage if you are purchasing equipment. So in the past, or if you're considered large, then equipment like up to those kind of dollar values needs to be depreciated over the useful life of the equipment. So there are some small business concessions around depreciation, effectively enabling you to bring more of the cost of the equipment forward. So small businesses are able to account for tax on a cash basis. So this essentially means that if you send out an invoice and it hasn't been paid before the end of the year, then you don't need to include it in your tax return. And then on the deduction side, and this is for both small and large businesses, you don't actually have to physically pay for a tax deduction to be able to claim it. So you just have to receive an invoice dated before the end of the financial year. For example, you receive an invoice dated the 28th of June 2019. However, you don't actually pay it until the 3rd of July, but you can still claim for it in the 2019 financial year. All right, tax hack number 9 is to use an accounting package. So I'd encourage everyone to embrace their cloud and use an accounting package like QuickBooks, Xero, or MYOB. So these essentially link your bank accounts automatically, making it really easy to allocate transactions and do things like invoicing. It does give you more control of your finances, enabling you to have a good bird's eye view of what is going on. It makes the end of year at tax time really easy because everything's already done for you. You just have to print out some reports. If you're registered for GST, it does make working with your GST and doing your BAS really easy as well. Most of them come with a phone app, which enable you to take photos of any receipts and upload them into the system. Some of them enable you to track your business kilometres for a logbook as well. Now, there is a monthly fee associated with them, but you may end up spending less on your accounting fees at the end of the year because all your finances are already together, so the accountant has less work to do. Now, I do recommend QuickBooks. I use it myself and I use it for most of my clients. I find that it has a really easy user interface. So it's quite easy for someone who's not an accountant to use it. And it also has a really friendly price point. So it's relatively cheap monthly fee compared to the other ones. So it's an easy entry point for people to start really taking control of their finances. And this is something I can help you set up as well. Tax hack number 10, GST registration. So do you need to be charging GST? So if you're earning more than $75,000 in a year, then the answer is yes. So if you're not quite earning that, then you're not legally required to register for GST. But there are some benefits to registering early. So essentially, if you register for GST, you would add 10% onto your invoices. But then you also get to claim back any GST on all of your business expenses. So this means extra cash in your pocket. So for example, say you've just spent $5,000 on a course, you get to claim up to around $500 back as GST, so that is the extra cash in your pocket. Now, handling your GST is really easy to do if you're using something like QuickBooks, so it does do it automatically for you. And if you would like to register or kind of talk about your individual situation around GST, I can certainly help you with this. And the last one, tax hack number 11, is paying tax now that you're a contractor. So as a contractor using your ABN, you are responsible for your own tax. So you no longer have an employer paying that for you on your behalf. So my suggestion is to keep around 10% of your pay aside for the tax payment at the end of the financial year. So this does depend on what else you have going on. But essentially, when you lodge your first tax return as with your ABN, you'll most likely be in a tax payable position, unless you also have a salary job paying PAYG tax for you. So once you lodge your tax return, you then pay your tax for that year. The ATO will then send you quarterly installments, which are essentially an estimate of tax payable for the following tax year. So you're paying tax in advance each quarter. So you're not waiting till the end of the year and paying that all in one hit. So your quarterly installments are paid through your business activity statement or BAS. And if you're registered for GST, this is dealt with through the BAS as well. So figuring out your business activity statement is something that I can help you with if you can't figure that out yourself. All right, so that comes to the end of our 11 tax hacks. Now I'll run through how I can help you. So the best thing to do initially is to have a chat to discuss your individual financial and tax situation. I can lodge your tax return for you. I can set you up and provide training on QuickBooks. I can help you with your ongoing bookkeeping in QuickBooks if this is something you've got no interest in doing yourself. I can provide tax advice, for example, looking at your individual situation around whether you're a contractor or an employee or entitled to super as a contractor. If you're a studio or a business, I can help provide some support around getting the finance side of your business set up properly. So with regards to business structures and things like that. And then I also offer coaching services. So what I tend to see in our industry is that people that are attracted to it are naturally giving type people, and they come in wanting to help others and come from a place of service, and often will have issues and struggle a bit around charging money for that kind of service of others. So I can help you work through any resistance or blocks that you might have in this area. All right, and finally, the bonuses. So as a thank you for attending this webinar, I'd like to offer you guys a 10% discount on your next tax return or piece of tax advice. And I'm also offering a 30% lifetime discount on a monthly QuickBooks subscription. So if you contact me and mention this webinar, I will honour both of those discounts. So the best way to contact me is through my website at www.healthymoney.co. I'll also be sending you an email tomorrow with a link to the replay of this webinar. So you can also just reply to the email if you would like to get in touch. All right, it is now time for the Q&A. So you will notice there is a chat box at the bottom of the screen. So you can type a question in the chat box if you do have anything you'd like to ask me. Again, just a reminder that I can't answer any specific tax advice online, but if your question is general in nature, please feel free to ask away. So I'm just noticing that the chat box is only letting 10 people on there. So if you find that you can't type anything in the chat box, send me an email to angela@healthymoney.co and I'll try and pick up the questions from there. Okay, so I do have a question from someone asking how to do a logbook. So there is actually an app that you can download from the ATO website. I think QuickBooks does an app as well. So there are quite a few different apps available. And essentially, you start with your existing kilometres from your odometer reading. And then every trip that you do, you take note of the new odometer reading. Then you work out the difference in the number of kilometres from that odometer reading compared to the previous one. And then you note down whether it was a personal trip or a business-related trip. And you need to do this for all of your trips for 12 weeks. So you can either use the app, you can also write it down on a bit of paper or a book. It is quite time-consuming to do, which is why not many people actually use that method. But if you are driving quite a lot, it is quite worth it, because I've seen people get deductions of like $6,000 and $7,000 for their car deduction. Okay, and I've got another question from someone around how to build savings. So yeah, this can be quite an issue in the industry. The earnings can be quite tight in terms of covering off just general expenses of rent, food and bills, etc. So my tip for building savings is to kind of create some buckets. So, and this comes from the Barefoot Investor actually. So if you allocate around 60% of what you earn to your daily expenses, so for bills, rent, groceries, etc., 10% goes to a fun bucket. Another 10% goes to a smile bucket, so for like travel or anything that makes you smile. And then 20% goes to, the Barefoot Investor calls it the fire extinguisher. So this account can be used for paying down a mortgage. It can be used to help build your savings. Or if you have debt, it can be used to start paying down that debt. Now, not fixed in stone in terms of the percentages, but I've found doing this has been a great way to start saving, and also to make sure you're saving for trips and holidays and fitting in all those fun things as well. So I've got another question here. Paying tax as a contractor using your ABN is only applicable if you earn more than $18,000 a year, is that right? And yes, that's absolutely correct. So everybody, including employees, we get an $18,000 tax-free threshold. So if your income is under that, then you don't pay any tax. And then if you earn over that, we have like marginal tax rates. So the more you earn, the higher the tax rate gets. So yeah, you don't need to worry about tax if your income's under the $18,000. Great, and someone's just mentioned on the chat box for the logbook that there's an app called Driver's Note that apparently is really great as well. So that could be one to look into. So the easier an app can make your life with regards to keeping track of your kilometres, the better, really. Fantastic. All right, so I think that's all the questions for now. If you guys do have any more questions, feel free to get in touch with me. I'm always happy to have a chat and run through any of your questions with you. So just to recap, some of the things that we went through on the webinar today were what you can claim as a tax deduction, looking at superannuation as a contractor. We went through the contractor versus employee in terms of your contractual arrangements, business versus employee in your tax return. We looked at the small business tax concessions, why you should be using an accounting package like QuickBooks, why you should register for GST, how you pay tax now that you have an ABN, and then we ran through how I can help you and also the bonuses. So that was 10% off your next tax return or piece of tax advice and a 30% lifetime discount on your QuickBooks monthly subscription fee. Okay, just got one more question that's come through. That's with regard to the contractor versus employee discussion and also the superannuation for contractors. So considering the rules seem to allow a lot of grey area, and yet the ATO puts the onus on a business to get it right, how would a business and or contractor get clear advice or rulings on their position before it comes to a legal dispute? So on both parties, on the employee or the worker and the employer, the ATO website would be the first port of call. So using the tools that they have to help kind of decipher your individual contractual situation. The next way would be to seek out the advice from someone like myself or an accountant, and also to seek out some legal advice on your particular situation. So this would be something I would do as a worker to just get clear on your situation, whether it is worth bringing up or not. If you do feel that you are entitled to be an employee or entitled to the superannuation, then this is where you bring it up as a discussion with your employer and just approach it like in a non kind of threatening way, I would say, and just be like, I've gotten some advice and I feel that I'm entitled to this, and maybe seek out some advice on their side as well. If you kind of come to a disagreement at that point, there are further avenues. So workers can put in a claim through the ATO website for their super, and essentially the ATO will come in and organise that for you. But yeah, it would be good to kind of get the worker and the employer on the same page before it comes to something like that, I would say. Cool. All right, so that is the end of the webinar. So I'd like to thank everyone for attending live or watching the replay. And I hope you got a lot out of the session today. And again, if you've got any further questions or would like to get in touch about getting a tax return done or some advice done, please do get in touch through www.healthymoney.co. And until next time.